The recent bank failure that we had in Kansas has pretty much gone under the radar. It was a Tri-State Bank, Elkhart, Kansas, that failed, and we had to see the Federal Deposit Insurance Corporation march in and basically seize the bank. It was turned over, bought by I think it was Dream First Bank. This is a bank that before its failure, folks had $139 million in assets, $130 million in deposits, and it is the first regional bank that we've seen fail since the failures of the series of banks that we had back in May. Now, we've been talking about quite a bit at Day Trade Fund, especially through the radio and TV interviews I've had throughout the course of the summer, that the regional banking crisis is far from over. We've talked about it repeatedly because as interest rates continue to be hiked, we see more and more pressure being exerted on these regional banks. As such, a lot of these banks have a very thin margin, and as they take on additional risk, in addition to a lot of the corporate loans that they're holding right now on corporate office buildings that, yes, are at most sometimes 40, 45% full, some of those loans are going to be defaulted on. And of course, they are in no position at all to assume that kind of additional liability in addition to everything else that's going on. What we saw here with the Tri-State Bank in Kansas is going to be the first in the second round of bank failures that we're going to be seeing. Surprisingly, this failure didn't receive a great deal of media attention. And I don't think that's on accident. I'm not a big conspiracy theorist here, folks, but I am saying that there is a great deal of energy going on behind the scenes to remind investors in the United States that everything is okay in the banking industry. The financial industry is sound. And I believe that to a certain extent, although I certainly see some turbulence coming in the near future. Now, from a day trading standpoint, we've been through this before. We saw this in 2008, the banking crisis. We saw this during the early stages of the pandemic, and of course, earlier in 2023, when the confidence was being shaken by the industry. And there's a few things that, as always, we can do to prepare ourselves as traders. The first is to be aware of what's going on. We see this coming from a mile away. The regional bank failures, as they start to accumulate, and right now, I think there's 576 banks that have been put down as not questionable as far as surviving, but banks that are certainly going to see a great deal of additional stress and pressure as we move forward. Moody's just got done downgrading several regional banks and listed several more, some very well-known banks, as additional banks that they have concerns, ongoing concerns with. It's amazing to see the names that are being put forth by Moody's and others as far as banks that could be seeing some difficult times ahead. So when we start to see the confidence being shaken in the financial industry, there's going to be a kind of several stages that we're going to be going through. The first is obviously absolute panic as people start to see something creep back in that they thought was over. Wait a minute, I thought this banking issue from last May is gone. I thought it was resolved. I thought it was nothing to worry about. Yeah, it's something definitely to worry about. So people with not a great deal of information on the investing side are going to overreact. And we're going to see a lot of banking stocks really go on sale as we had during the time of the crisis with the banks that we saw earlier this year. If you're positioned well, there's a great deal of money that can be made in the short term. And that's what we like. Stocks that are moving fast that we can jump in, jump out of, make our 5, 10, or in some cases 15% or more as we had earlier this year. The other thing to be very mindful of is the fact that there's going to be a series of situations that are going to come up as the banking crisis begins to implode. The first, you're going to see a lot of politicians step forward with their ideas as far as what needs to happen. And it's being discussed already behind closed doors. And we've seen it even in some press releases that there's discussions on limiting the amount of money an investor can remove from his account in a daily basis. It used to be there was a run on the bank when everybody went to the bank, stood in line, and got their money out. Only so much cash on hand. They had to shut the doors. And of course, a lot of problems happened after that. It's worse for the banks today because now you can simply go online and electronically transfer some, most, or all of your money right out of there to another account. So we're seeing politicians say, look, the best way for us to make sure that this doesn't get out of hand, as they fear that it will, is to limit the amount of money that you're able to transfer and have access to in the course of a given day. I think that's ridiculous because it's our money. We put it there. We should be able to get back as much of it as we want when we want. There's still banks in Europe, folks, that are at a point right now that are asking customers when they come in to withdraw any sum of money, what's it being used for? Yes, customers are being forced to tell what the money is being used for. Now, I'd love to say absolutely none of your business, but it's up to the bank to determine whether or not they're going to give you that money or not. And in some cases, they're asking customers, well, before we're going to give you your money, we need an invoice to prove that's what this money is going to go for. Now, there was a time that would have seemed like the plot of a stupid B movie that nobody went to watch because it was so bad. This is reality. So when you start to see some of these things start to kind of begin to gain traction, we're seeing more and more of it. Here in the United States, we've seen people that have had their bank accounts seized. Why? Because there were questions over the account itself and how it was being used and all these other types of things. I'm not anti-bank, and I'm not saying go to the bank and rip all of your money out, but I am saying for those of you that trade stocks to be very, very mindful of being patient and being very aware of what's going on, because we're going to see a lot of emotion take over. The volatility index, which has been cruising around these days, anywhere from 12 to 15 to 18, occasionally popping over 20, then back to 15, it's going to rock and roll. We're going to see that fear index, the volatility index, shoot up quite a bit. And as a result, we're going to see a lot of people that are going to panic. They're going to sell first, ask questions later. And if you got your catcher's mitt ready and you know exactly where you're going to buy these stocks at a significant discount, there's a great deal of money that can be made. One of the things, though, you have to be careful of is making sure that you're aware and keeping up on what's taking place. We have several more day trade fund videos that are going to be coming out talking about some of the opportunities without getting into the specifics that I use with my students. I'm not going to do that, but I'll point you in the right direction. I'll give you a few key hints that should be able to help. What we know right now is buckle up. It's going to get very, very interesting as we move forward in the regional banking type as far as the sector. And as a result, it's going to open up a great deal of revenue opportunities for those of us that are trading and that are poised and ready.